Mr. Shankar Banerjee, Group CEO of Dr. Lal Pathlabs joins us now. Let's connect with him in terms of how things have transpired for the quarter gone by. For the quarter gone by, Dr. Lal Pathlabs has reported strong performance with a beat on margins versus what the consensus estimates were. That's what brokerages in a sense are indicating. Mr. Banerjee, this is one sector which saw a huge sugar rush post-COVID. Then the base effect started kicking in, competition intensified, COVID test impact started fading away, and then we saw a downward spiral. Have things now normalized for the entire diagnostic space and for Dr. Pathlab?
So, thanks for the question. I think the overall competition scenario, some bit of the maybe irrational pricing that was seen intermittently has subsided a bit. But the industry has its own inherent competitive aspects which continue. So, from that point of view, with a bit of softening of some of the pricing uh, or heavy discounting that we saw, one can say yes, it has subsided a bit.
So, do you think that for FY25, the industry will at least clock double-digit growth? And if the industry will clock double-digit growth, you will grow 3 to 4% higher from the industry average?
So, in our industry, we don't have any analysis which gives an industry-wide information. We at best can look at what the listed companies' performances are, which are in the public domain. But having said that, I think if you look at Dr. Lal Pathlabs and what we see as what could be, FY25 for us, we are looking at growing better than, at an annual level, better than what we did previous year without having to take price increases.
But what is it that you're guiding for in terms of margin growth for the full year, Mr. Banerjee?
So we've been consistently saying that our EBITDA margin level would be around what we even see in our delivery in quarter four, in the range of 26, 27% kind of EBITDA margins. I think that's something which we continue to state is something which we are working towards.
Mr. Banerjee, if I have it right, you've guided for a double-digit revenue growth in FY25. Would it be led by more of a volume uptick or the realization mix changing? Because in this quarter, that is what aided your performance, because volume growth was a bit more tepid. The revenue growth was led by the change that we have seen in the test mix. What about the way forward?
So we are looking at both the levers, and actually, when we look at volume, we look at both parameters, patients as well as samples. Our sample growth also has been quite robust. We've grown upwards of 8% on samples as well. So between that, we will see volume, which is patients and samples put together as one of the key pillars on which this growth will sustain. Also, there will be work, and we see, with improving contribution from our Swasthfit portfolio, which we continue to drive, and other activities that we are doing, we definitely think that there will be a mix improvement also that is being planned.
Okay, I also understand that you're focusing on expanding your reach as well, because right now, of course, you're a lot concentrated in Delhi and the West. But I think Swasthfit is something that you're looking at expanding as well. There's plans to expand suburban as well. Talk to us about that.
Yeah, so these are all different elements that go towards delivering the growth that we want for the business. So yes, there is a dimension of expanding our reach in the tier 3, tier 4 kind of cities, getting more deeper into our core geographies. So that's one dimension. Secondly, Swasthfit as a portfolio continues to expand, and we continue to work on it for making it even wider in terms of acceptability and reach. And suburban business also has been showing some very good signals of growth that we saw in the last quarter, and that will help us consolidate further in the western region.
The other thing I wanted to understand, and perhaps in continuation of what you just mentioned, you've got a good 1,000 crore rupees on your books. Suffice to say that that would be utilized for expansion purposes itself?
So for expansion, there are new labs that we plan to put up. That's some part of capex investment is required for that. That is something which we plan to do again in FY25. And over and above that, we are as a part of our stated strategy, we have said that we will continue to look for good acquisition targets, specifically in south and west part of the country. If there is something which we believe fits into our growth agenda, then that we will evaluate.
Okay. Tier 2 and Tier 3 cities where you are expanding now. Tier 2 and Tier 3 cities, the pricing is very different. They are more focused on price, they are more focused on speed. Would you be able to compete with a Tier 2 and a Tier 3 unorganized player who's got better cost structure? How would you compete there?
So, we've been kind of at it for close to about maybe 4 or 5 years now. And I'm really not even talking tier 2, tier 3. I'm really talking tier 3, tier 4. And, so that is, if we remove the top 100 cities of the country, I'm talking about tier 3, tier 4. And we've right now, penetrated it to an extent where more than about 30% of our revenues actually come from tier 3 plus cities. And that is a business model that we've been perfecting over the last 4 to 5 years. And I'm happy to share that, even with more than 30% contribution coming from tier 3 plus towns, we are able to maintain our overall profitability profile. And that's really been the learning and the growth journey we have kind of achieved in the last 4 to 5 years.
Looks at the entire diagnostic space, there is competition which is coming after the recent M&A, which is that Therocare and PharmEasy, they've become one in terms of giving a platform. You've got NetMeds, which is moving into diagnostics. You've got the Tatas, the Reliance, and perhaps the bigger brands which are moving into online diagnostics, where they're offering the same service which is clubbed with other pharmacy services. How disruptive is that for you?
So if we look at overall diagnostics sector, the organized play in diagnostics is still quite small. We are in maybe, mid-teens kind of contribution, which comes from the organized players. So more and more organized players coming into the industry at a certain level is actually good for the industry. And I think there is enough headroom available for newer models to come, build, scale, and survive. So it need not necessarily be at the cost of what Dr. Lal Pathlabs is aiming or trying to achieve.
Point taken. Just before we let you go, Mr. Banerjee, you talked about the pricing stabilization in the industry, but in the quarter gone by, some of your peers did indicate the possibility of a price hike as well. Could you detail out for us in the next 6 to 9 months? Do you have anything lined up in terms of price hike now?
So like I said in the opening remarks that I made, the revenue growth that we are planning for next year, trying to be better than this financial year, we want to do that without having to take any price increases. And we believe that that's something which we should be able to achieve.
Banerjee, great to have you on the show. Thank you so much for taking the time out and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.